Hello and welcome. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh, and this is ET Now. Now, this is a show where we'll take you through stories from the domestic front as well as from across the globe, and we'll talk about brokerages, the stocks that they're keeping on their radar, the stocks that you need to be keeping on your radar for this trading session as well. So, Shreyansi, let's kickstart the show with the global handover and tell us what the US markets looked like yesterday.
Absolutely. So, it's been a good 5 days for the US markets, and today also just the same handover that we're seeing. S&P 500 futures were little changed, and this is as investors readied for the fourth quarter gross domestic product report, and a post-earnings surge in Netflix shares helped carry the S&P 500 and the Nasdaq Composite to a fifth winning day in regular trade. Now, the broad market index eked out a gain of 0.1% thereabout and posted a fresh record high. While when you look at the Nasdaq as well, that added about 0.4%. The 30-stock Dow slid about 0.3% on the other side, but on Thursday, investors will have their eye on fourth quarter gross domestic product data, which is expected to show growth at a 2% seasonally adjusted annualized pace. Now, that will reflect a slowing from the 4.9% reading in the third quarter. On the earnings front, you've got Humana that is expected to report before the bell, along with Southwest Airlines, American Airlines, and after the close you also have Intel, T-Mobile as well as Western Digital reporting their quarterly results. So that will be something that will be key to watch for that particular market. But when you look at US Treasury yields, they climbed on Wednesday, and this is as investors are bracing themselves for two key pieces of economic data in the second half of this week. Like I just mentioned, the yield on the benchmark 10-year Treasury note was up more than 3 points, around that 4.17% mark. So that's the handover largely coming in from the US.
Absolutely, and before we talk about crude, let's also shift focus and talk about the European markets over there, because what action we've seen coming in over there. The PMI, the Eurozone PMI has come much better than expected. That activity has improved. Stock 600 is 1.1% higher. Tech stocks were up almost 5% in trade yesterday. So big moves coming in when it comes to Europe as well. You had DAX. DAX was the real winner, up 1.5%. FTSE up 0.5%. CAC up almost 1%. Well, lots of action coming in from Europe as well. Shifting focus now, let's talk about crude then. And US crude oil prices rose about 1% yesterday after domestic production fell substantially in the wake of a severe winter storm that has been coming in this month, but the one that came recently was the highest and the coldest one that oil fields have seen. Let's take a look at what oil is doing, and WTI at $75.3 per barrel and Brent just above that $80 per barrel mark. Let's see if these prices are sustainable going ahead, because production in the US has fallen by an estimated 1 million barrels per day to 12.3 million barrels per day total for the week ending January 19. This is of course according to the Energy Information Agency. And the commercial crude inventories in the US dropped by 9.2 million barrels during the same period, so big cut coming over there. And a blast of Arctic weather hit oil output in the US last week, particularly the state of North Dakota, which is the third largest crude producing state in the United States. Now, crude production in North Dakota was down by as much as 700,000 barrels per day last week, according to the State Pipeline Authority. Now, surging US crude production has weighed on prices for months, with estimated output returning to a record of 13.3 million barrels per day before the storm hit. Now, record production in the US has collided with a weakening economy in China, raising worries that supply is outstripping the demand for oil. Elsewhere on the supply side, Libya has restarted production on Sunday at the Sharara oil field. We've been talking about that over the course of the week. Now that oil field has the capacity to produce 300,000 barrels per day as well. Remember, that oil field was shut down for 2 weeks due to protests and has restarted just last week. Oil prices should remain range-bound in the first quarter of 2024, barring a significant escalation in the conflict in the Middle East. So while you have supply, you also have some concerns that are weighing on supply. So we'll see how this pans out on oil prices going ahead, Shreyansi.
Absolutely, and let's take a look at some of the key events to watch as well then. And when you look at US, you've got GDP as well as initial jobless claims data coming in. And in the Eurozone as well, you do have the ECB rate decision. Now, in terms of corporate action, keep an eye on that weekly expiry. And a couple of counters that will be buzzing on account of the last day to buy to be eligible for dividend are Mastec as well as IIFL Finance. Now, also JSW Steel as well as Shriram Finance will remain in focus because they'll be mulling raising long-term funds. So keep an eye on both of those counters. And in primary market action, you do have Nova Agritech IPO that closes for subscription. So host of action in terms of what you should keep on your radar.
Absolutely, and let's shift focus to some global stories we've been tracking for you. And starting with the news flow we are tracking this morning, amid rampant efforts to boost the country's growth, China has pledged to cut bank reserves starting early next month. The People's Bank of China is making a 50 bips cut on the reserve requirement ratio, which will thereby inject nearly $140 billion into the system in long-term capital.
And a slew of stocks reacting to earnings as well. We had tech giant IBM that extended gains in after-hours trade on the back of that Q4 earnings beat. Company delivered a 4% top-line growth, but despite the beat, the management sounded caution over, and I quote, a very challenging, uncertain and volatile macroeconomic environment.
Staying with earnings then, Tesla, however, reported a miss on their revenue and profit figures in the fourth quarter. A meager 1% growth in their automotive revenue ailed results, a very sharp contraction in margins on year-on-year basis to 8% versus 16% same time last year, and outlook for the year going ahead is also not looking very positive for Tesla.
And tech giant Microsoft scales a remarkable feat in valuation, surging past the $3 trillion market cap. This achievement firmly positions Microsoft as the world's second most valuable company, trailing closely behind Apple. Do remember, Microsoft had in fact briefly surpassed Apple as the world's most valuable company.
Well, and pain sees no end for plane maker Boeing. The Federal Aviation Administration has gone ahead and halted the company's planned expansion of the 737 MAX production. However, the regulator has cleared the way for their 737 MAX 9 jets to return to service just 3 weeks after the door plug flew out of the Alaska Airlines flight. Shares of the company took a 4% hit in after-hours trade on the back of this announcement.
And 7 days to go for the all-important Budget 2024, and the traditional halwa ceremony was held in the North Block in the presence of Finance Minister Nirmala Sitharaman and other officials, including Finance Secretary T.V. Somanathan, Eco Affairs Secretary Ajay Seth, Deepam Secretary Tuhin Kant Pandey, among others. Remember, a customary halwa ceremony is performed every year before the lock-in process of budget preparation begins.
Alright, those were all the important stories that we were tracking for you this morning. With that, we'll slip into a very short break. We'll look at how the Asian markets have opened this morning when we return, so stay tuned. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Let's take a look at how the Asian markets have opened up, and well, they're mostly falling as investors are assessing South Korea's GDP numbers and markets respond to China's central bank cutting reserve requirements for the country's lenders. Let's start by looking at what South Korea is doing. Kospi is down 0.4%. Now remember, South Korea's GDP grew 2.2% year on year in the fourth quarter and up 0.6% compared with the previous quarter, and beating all expectations from a Reuters poll of 2.1% growth and 0.5% growth sequentially respectively. Despite of this, Kospi is in the red, down 0.4% as we speak. Shifting focus to China then, the People's Bank of China announced that it would reduce the amount of funds its banks are required to hold as reserves early next month in a bid to boost its struggling economy. We did address this earlier in the show as well. Let's see what impact this is having on their market. Hang Seng is down 0.2%, not too deep in the red, but in the red nonetheless. And let's also take a look at what Shanghai is doing. Shanghai is the one in the green, up 0.4%, holding on to those gains. So well, let's see what happens over there as well. And moving on to Australia, ASX 200 started the day with an uptick of 0.4%, has lost some of those gains but is in the green nonetheless, 0.1% in the green, nominally not doing much over there as well. And lastly, let's talk about Nikkei then, because Nikkei was where all the action was over the last few days. Up and up in the green, but today Nikkei has reversed all of those gains, almost down 0.5%, a 164 4-point downtick coming in on Nikkei. Shifting focus back home then, we managed to close above 21,400, precisely at the 21,453 levels. However, implied open at 21,441. So, well, that's just a nominal downtick to where we closed yesterday. Not much action happening as implied by the Nifty opens. So, Shayansi, we'll see how that pans out for us this morning.
Absolutely. But we also have... Welcome back. Thank you so much for staying tuned in. Well, let's take a look at Bajaj Auto then, and their third quarter numbers. It was a largely healthy set of numbers, and when you look at domestic volume growth, that jumped 43% on a year-on-year basis. Srishti is standing by to do all the number crunching. Srishti?
Well, an inline set being reported by Bajaj Auto this time around, though our margins are a little better than what we were expecting at ET. Now onto the revenue front, we have seen a jump of 30% on a YOY basis. More than 12,000 crores of top line is what the company has reported this time around. EBITDA has seen a jump of close to 37%. And talking about the margin figure, that has seen growth to 20.1% this time around. That's almost 100 basis points jump on a YOY basis, but almost flattish when it compares sequentially. Talking about the growth in the volumes, then definitely there was a push from the domestic volumes this time around, and what the company also highlighting that the domestic business firing on multiple fronts drive the revenue, EBITDA and profit figure to a record high levels. The margin growth has been driven by better realizations, dynamic cost management as well as operating leverage. Now the domestic business was also supported by an upbeat performance in their motorcycles portfolio, particularly in the 125cc plus segment, and the company also saw a slight uptick in the billing volumes in the overseas market, wherein they do highlight that there has been a step up in markets of LATAM, Asia as well as premium bike exports, which was actually a bit offset by the drag arising from the Africa and notably Nigerian markets. Along with that, on the commercial vehicle segment, they say that it's another quarter to be stepped up in the volume trajectory. More than 40,000 plus volumes per month is what the company has reported for the commercial vehicle segment, and they plan to double it down in the times ahead. Onto their Chetak EV volumes, they have gone ahead with a market share of 14%. The Triumph has seen an encouraging double-digit segment market across the select cities, and exports have also commenced in this particular quarter. So all in all, good set coming in from Bajaj Auto as well as a positive management commentary.
Alright, Shrishti, thanks for taking us through that. We'll see how the stock reacts to the good set of numbers that Bajaj Auto has posted. But it was also a good show on the top line from IT major Tech Mahindra for Q3. A segment-led growth largely on account of robust trends seen in manufacturing and healthcare. So let's go across to my colleague Anisha for the fine print of those numbers. Anisha, take it away.
Oh, well, yes, I think I'm actually pleasantly surprised by the top line performance, and I had to double check the number in terms of the constant currency sequential growth, because this time it's a growth of 1.1% versus street expectation of a decline of around 1%. So that's the key positive, and that's the reason the dollar revenue at $1,570 million as well as the rupee revenue of over 13,000 crores is coming in as a beat versus expectation. Margins are largely in line. There has been pressure for the last couple of quarters. They have been transitioning from the low profitability orders. There has been a bit of a rejig in terms of the different verticals as well, and they have been losing out on the profitability in that case, and that is what happened this quarter as well. The margins haven't recovered by a whole lot. There still seems to be some exceptional items which are drawing down on the margins, and that's the reason the profitability is lower, 510 crores versus our expectation of around 560 to 590 crore thereabouts. But I think it will still go down okay with the street because the revenue growth has been quite strong. So let's see how the stock reacts, because if you look at the headcount, that continues to decline. We haven't seen a major improvement there. And the deal wins that have come in at around $381 million is towards the lower end of the range. There were parts of the street that was expecting deal wins between $500 to $700 million band. There were part of the street that were expecting $300 to $500 million, but this has come in at the lower end of that range. So it is, there are parts of the numbers which are inherently weak, but it's not a complete howler that we have seen for the last few quarters. But because at least on the top line front, they've managed to defend their ground. And I think that's the silver lining. But other than that, margins, headcount, deal wins are not that impressive. Back to you.
Absolutely. Thanks, Anisha, for that roundup. Let's also listen to what the management had to say as well.
We have embarked on a turnaround phase in TechM's evolution, and we are actively making foundational moves to upgrade our performance. The overarching goal that we have in this phase is to make the investments and the changes to maximize our long-term earnings growth, to drive a culture of performance in both delivery and in sales. We're in the process of defining our long-term strategy, which will then be effectively implemented to give the long-term value for our customers, for our employees, and for our shareholders. In the previous earnings call, I had shared the fact that we are embarking on 3 tracks to unlock the value from our operations. The first track is for sales improvement, or the revenue growth track. The portfolio companies are also being integrated under the respective business units.
Alright, that's the word coming in from the management of Tech Mahindra. But shifting focus then, let's talk about the earnings of 2 major steel companies, and first being Tata Steel. Now, Tata Steel in Q3 has swung to a consolidated net profit of over 522 crore rupees from a net loss just last quarter, and this was aided by a robust domestic demand offsetting weakness in Europe. Ashesha is joining in with more details and all the number crunching on the Q3 numbers. Good morning, Ashesha. Break down these numbers for us, please.
Well, yes, Tata Steel has reported very strong set of numbers. Revenues are largely in line with what we were working with, but a big beat has come in as far as EBITDA and margins are concerned. Margins, in fact, have come in at 11.3%, much better than 8.5% ET Now poll, and even on a sequential basis, margins have expanded a whole lot. India performance continues to show resilience, although European operations have reported losses for the 5th consecutive quarter this time around. India revenues are largely stable on a sequential basis, but India EBITDA per ton has seen a solid uptick of about 27% on a sequential basis. As far as Europe operations are concerned, as I mentioned, it continues to be a pain point for the company. Lower volumes and lower realizations impacted UK performance, and as far as Netherlands business is concerned, that too reported weak set of numbers this time around. Capex was largely in line, and net debt has risen marginally this time around on a sequential basis. Morgan Stanley, in fact, has come out with a note where they are maintaining their equal weight stance on the stock with a target price of 120. They say domestic performance was very strong this time around, although Europe performance was weak this time for the 5th consecutive quarter. Domestic EBITDA was aided on account of higher realizations and lower cost of production, but consolidated EBITDA this time around was much better than what the street was working with, despite weakness that we saw in Europe. All in all, good set of numbers have come in from Tata Steel.
Absolutely. So that's about Tata Steel, Ashesha, but stay with us for now because JSW Steel is also slated to report its Q3 results. So what is the street penciling in for that as well?
Well, yes, we are expecting weak set of numbers from JSW Steel this time around. Muted realization growth, lower volumes and higher cost of production are expected to impact JSW Steel's numbers. Consolidated revenues could come in at about 42,500 odd crores, down 5% sequentially, and margins too are expected to contract this time. They could come in at about 15.7% versus 17.7% that the company had reported in the previous quarter. Realizations, as I mentioned, could pick up a tad bit by about 1% on a sequential basis. Remember, steel prices were rising till October end, after which they started falling, and hence some impact of higher steel prices will flow through in this quarter, and hence realizations could see an uptick. As far as EBITDA per ton is concerned, that is expected to decline by about 12% on a sequential basis, and this is on account of higher cost of production. Remember, both coking coal and iron ore prices were on the higher side sequentially, and hence cost of production is expected to rise. As far as volumes are concerned, they are expected to be impacted this quarter on account of muted exports and low priced imports, which impacted domestic steel sales of JSW Steel. Management commentary on capex, on guidance, production and sales guidance for this year and next year will be crucial, but all in all, sequentially weak set of numbers are expected from JSW Steel.
Alright, Ashesha, thanks for taking us through the numbers and what we can expect from JSW Steel. Let's move on, and it's an 18-hour news break confirmed, and it's official. In a big respite for patients, cashless treatment can now be availed even in non-empaneled hospitals. The hospitals who don't have a tie-up with an insurer, rates of empaneled insurer will be applied over there. Now, 18 Hour first broke this story on the 11th of December, and we have Anurag Shah, who broke this story, joining in now. Anurag, congratulations on getting the story right, and what are you picking up on this story?
general insurance companies have announced cashless everywhere facility for all the policy holders. If a customer goes to any hospital, they can claim cashless treatment. Even that hospital is not empaneled with the respective insurance company. So we have reported this last month that from January, insurance companies are going to allow cashless everywhere. So this has been announced by the insurance company under the banner of General Insurance Council. There are few conditions. The one is that 48 hours prior intimation would be required for planned treatment. So policyholder need to intimate the hospital 48 hours before the treatment, and in the case of emergency treatment within the 48 hours intimation would be required. Like after the getting admitted into the hospital within 48 hours you have to intimate the insurance company about the treatment. So it's a very big move by insurance company where the company policyholders can claim for cashless treatment to each and every hospital. Presently, the cashless claim ratio is 63%, and companies are aiming to make it to the 100%.
Well, Anurag Shah also spoke with Tapan Sukthankar, who's the MD and CEO Bajaj Alliance GI and Chairman General Insurance Council. He shares how the system functions as well as how they plan to deal with frauds as well. Listen in.
Exactly. Yeah. So they go to any hospital, it may be empaneled with some other company, and they tell their company it's elective surgery or elective treatment, and they give them 48 hours time. It is the duty of the insurance company to provide them cashless. So that is what we are endeavoring to. It's a huge step. No, I think we are going to do a lot of other steps. We're working with the government, NHA, to provide a platform. We're already linking up companies with API. But we said let's start taking big steps, as we completely move to full transparency and complete smooth flow of claims and hassle-free from customer perspective. This is a big step of the entire industry coming together, as you see in Anurag. Right?
And sir, my last question would we be able to detect the frauds also through this initiative, and how that will help in that tapping the increasing insurance premium?
Yeah, so if you see, there are two things to it. One, when transparency comes in, fraud comes down. It's a very simple thing. Let's say we're saying 100% cashless. Let's say as a customer, somebody doesn't want cashless. It'll be a bit surprising why. Some hospital doesn't want to be part of network. The industry is already paying over 70,000 crores of claim every year to hospitals, and that's going to move up to a couple of lakh crores in times to come. Why would you not want to be? I think that would be a red flag. So as you see, when the common pool starts coming in and data starts coming together, I think the fraud detection also starts happening at a much better pace. And that itself will bring down the cost and the pool getting bigger. I think that is what, from a premium perspective, also an impact in times to come. So let's see how much impact does it bring together now.
All right, so let's move on then and let's talk about a development in the Zee-Sony merger. And Zee has taken a decisive stance in response to Culver Max and BEPL swiftly addressing their claims. The media giant is gearing up for a legal showdown as it heads to the National Company Law Tribunal, or the NCLT, determined to contest the allegation brought forward by Culver Max and BEPL. My colleague Ankur Mishra, who's been tracking all the developments with the Zee-Sony merger, is joining in with more details. Ankur, over to you.
Yes, so Zee Entertainment has taken legal recourse against the termination of merger with Sony, and in an application which has been filed with National Company Law Tribunal Mumbai, it has asked to implement the merger which was approved by the court. Remember, last year NCLT had approved the Zee and Sony merger, and after that both the parties tried to implement the merger, but on December 21, 2023, both the parties decided that they will have negotiations in good faith whether or not to extend the merger timeline, and after that Sony finally terminated the deal and sent a notice to Zee Entertainment and also asked for a compensation of $90 million. Now, as far as arbitration proceedings are concerned, Zee Entertainment is demanding that should be withdrawn, and also court should ask both the parties to implement the merger.
Well, onto some budget cover then. According to sources, government is considering restoring higher tax deduction on research and development expenditure to put all of this into perspective, we have Bhavya Dua standing by. Bhavya, take it away.
Right, so moving closer to the budget, we hear demands and wish lists shared by various industrial bodies to the government, and right now we are hearing that the government is considering requests from firms, particularly the pharmaceutical industry, to restore a super tax reduction of 200% on R&D expenditure. The pharma industry is seeking the tax benefit as an incentive for boosting domestic research in developing drugs, even as the government seeks to bolster the pace of local manufacturing under the Atmanirbhar Bharat initiative. A weighted deduction on expenses linked to internal R&D was raised to 200% from 150% in the 2010 budget. The government later slashed this deduction limit to 150% from financial year 2018 onwards and 100% from financial year 2021. Pharma industry is now seeking a restoration of tax reduction to 200% in the upcoming budget. The Indian Pharmaceutical Alliance has also put in a request to introduce R&D linked incentives. They are seeking tax reliefs as research and innovation are cost-heavy projects for the pharma industry. We are hearing that the government may consider a proposal of restoring these deduction limits in full year budget after the 2024 Lok Sabha elections, as the interim budget ahead of the 2024 polls is only going to be a proposal of vote on account for the government.
All right, Bhavya, thanks for that. Let's move on then. And Finance Minister is likely to announce FAME 3 in the Union budget. Now, ET now has learned from sources that the Finance Ministry has agreed for a budgetary allocation of 12,500 crore rupees for FAME 3 scheme. The scheme will continue to boost electric vehicles penetration in the country, and Samir Dikshit has more details on this. Good morning, Samir, over to you.
In a move to give a boost to the electric vehicles in the country, we can expect a big announcement in the upcoming union budget. What we are picking up from the Heavy Industry Ministry sources that FAME 3 could be announced in the budget, and this time the budgetary allocation for FAME 3 scheme could be somewhere to the tune of rupees 12,500 crore. Earlier, sources have informed that the Ministry of Heavy Industry pitched in to the Finance Ministry for a budgetary outlay of somewhere around rupees 35 to 36,000 crore for this FAME 3 scheme. But somehow to this tune, Finance Ministry didn't agree. Then after the intervention of the Prime Minister's office, PMO, the common budgetary outlay that was agreed upon was rupees 12,500 crore. So somewhere around this quantum, the budgetary outlay could be announced in the upcoming union budget. And this FAME 3 scheme target to give a boost to the electric vehicle production and the sale in the country. The government aims to upscale the electric vehicle sale to the tune of 30% of the total sales, and similarly 50% of the total two-wheeler sales should be electric vehicle. So this is what government is looking at, and the FAME scheme that aims to provide subsidy for this electric vehicle will give further boost to the entire mission.
Well, thanks, Samir. Out of time on this segment. See you with more news and updates on the other side.
Hi there, welcome back. And as we head into February, let's understand how the markets have fared and what we can expect from the upcoming month. Let's look at a historical trend of the markets in February in the years that went by. Ansh is joining in with this ET Now Insight. Ansh, good morning. Take it away.
Good morning, Snehi. So we have collated data for Feb series of last 5 years, and as per that, for Nifty, we are seeing 4 negative closes and an average move of minus 0.3%. Whereas for Nifty Bank, we are seeing same 4 out of 5 Feb series are in negative, but because that one positive move is huge, around 20%, the 5-year Feb series average comes at around 1% in green. So in a nutshell, not so positive outlook coming in from the seasonality data for Feb series. Seems like the shortest month of the year belongs to short traders.
Well, thanks, Ansh. With this, it's curtains down on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, my co-anchor Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. The market takes the action forward, so stay tuned.